Hey guys, and welcome to the Working Money Channel. So I'm back today, guys. Had a good day off yesterday, and it's a long weekend. I hope everybody's having a good long weekend this weekend. There have been some updates. It is now September, a brand new month. And, historically, crypto's not really looked good for September. Digital Assets Daily posted this. So Bitcoin may collapse to $10,000 if this happens. Now, not saying it will happen, but it is an interesting point and definitely something we should be looking at. In a recent thread, T3 trading group Scott Redler, says that the price of Bitcoin might be on track to plunge to $10,000 if bulls fail to hold up 17.6. So he's just taking a look at the Bitcoin chart. Right now we have been hovering around $20,000. At the time of this recording, Bitcoin is trading at 19.7, but we have really been flirting with that $20,000 mark for quite some time now. I'm just going to put a line here at about 20,000 right up here. It's roughly there. That's $20,000. We know 20,000 was the top of the last bull run that we saw at the end of 2017 before we went into a full bear market. And old resistance is becoming new support, and this is why we're seeing the Bitcoin chart just kind of flirting with this level. The largest cryptocurrency is currently trading at 19,800 as of the time of this publication. Redler claims that this September will be very interesting due to the sheer number of opportunities in the crypto market. So bearish pressure will continue to mount as long as the price of Bitcoin remains below the key resistance level of 20,007. As reported by You Today, Bitcoin ended up being the worst performing asset of August after outperforming in July. The cryptocurrency was hit hard last month, so there's some reasons for that. U.S. Federal Reserve dashed traders' hopes of a more accommodative monetary policy. Also, Redler predicted that the price of Ethereum could drop to below the $1,000 mark. And then he references the September effect, all right? Historically, September has been a terrible month for Bitcoin. The largest cryptocurrency has declined an average of 6% in September since 2013. Bitcoin only managed to remain in the green during the months in 2015 and 2016. In 2014 and 2019, however, the price of the flagship cryptocurrency collapsed by 19% and 13.4% respectively. So we are basically taking a look at this, taking a look at historical trends, and looking and gauging where Bitcoin could go next. I know I've talked about this price level here, forming what would be new support on old resistance from back in June of 2019. That would be at the $13,700 mark. But what he's predicting is $10,000. So if we take it down to about here, where's 10,000? $10,000 is roughly there. And you guys can see, even at the $10,000 mark, we see old resistance being formed here, 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 here. Okay, and the new support being formed here. And there's a lot of bouncing around in here. So another psychological level, $10,000. And if we were to just take the trend all the way from up here down to $10,000, that's still in line with that 80%, or rather 85% correction for Bitcoin that we have routinely seen, like in the last bear market here. From the top down to the bottom, we saw about 84.5, so roughly the same amount. That would be a doozy. From there, though, if that were to happen, I mean, there's some evidence suggesting that it could. A lot is suggesting that we are probably not going to go that low, and this is just kind of a minor correction in the grand scheme of things. I know it feels like it's hitting harder than it probably is, considering how much Bitcoin has rallied and accumulated over the last decade. The trends, they're getting more dramatic, and so these corrections, although they feel like bear markets, could in fact just be a micro correction in a grander trend, which would eventually see Bitcoin perhaps go up to over $100,000 per coin. You know, if I throw a Fibonacci here, and if we were to just assume that this was the bottom of the market, all right, we top it out there. Where would we see Bitcoin go if this was the bottom? Just based on a basic fib, we could see it perhaps hit $235,000. And I'm even seeing, being more conservative, maybe 150, hitting the 2.618. Matty Greenspan here on Twitter, also noticing this, a huge spike in Bitcoin's hash rate over the weekend, so a new record high set for Bitcoin hash rate, something else that we should be paying attention to. So yeah, I have a feeling, this September is going to be interesting. Of course, the altcoins are going to just move along with Bitcoin. Right now, we've got XRP trading at about 33 cents. So not too much movement there for XRP or other altcoins. Also, guys, in the news, this one from Michael Branch, yet another verified Twitter account that has been hacked in order to promote a blatantly obvious XRP scam. So this coming from You Today. And apparently the PricewaterhouseCoopers Venezuela account PwC Venezuela did recently get hacked, and they're trying to promote something with Brad Garlinghouse's face here. It is advertising a big event with Ripple CEO Brad Garlinghouse that is supposed to take place an hour from now as of the publication of this article here. Its tweet encloses a link that is supposed to bait potential victims into sending their crypto. So again, guys, beware of these scams. Just a public service announcement just to make sure that you guys are aware. Because yeah, even verified Twitter accounts can be prone to this. So, I mean, this is why I always like to just keep my crypto safe. I don't really touch it, and I don't really pay attention to my balance that often. I know how much crypto I have. I know what XRP is trading at, so I keep mine on a cold storage device. I personally use the Ledger Nano. I have an affiliate link in the description. If you guys want to get one, you can use it if you want. You don't have to use it though, but just wanted to make you guys aware that more scams are occurring even with verified blue check mark Twitter accounts. Anyway, wanted to thank Michael just for posting that. Lots going on in the world monetary policy. The people at the helm in the US are making very careful decisions as to where to go next. But President Putin, Vladimir Putin here, this has been making the rounds on Twitter recently. It's a speech from just a couple of months ago. Peter Schiff, Peter Schiff, the gold bug, he says Putin has a far better understanding of inflation and the US economy than Jerome Powell or any member of the FOMC. Maybe this is the real reason why he is so dangerous. And so I'm going to play you guys this, and it's in Russian with subtitles, so I will just read along. Turn the volume off there, and maybe I'll make it a little bigger so it's easier on myself. Surging inflation is a product, and commodity markets have become a reality long before the events of this year. He starts off by saying, surging inflation. Yeah, okay, sorry, I just read that. The world has been driven into this situation by many of the irresponsible macroeconomic policies pursued by the G7 countries. Calling it out. Including uncontrolled emissions and accumulation of unsecured debt. Unable or unwilling to find other solutions, the governments of leading Western economies simply accelerate their money printing machines. So again, Putin here I'm just going to stop it there. Putin here basically not sugarcoating it, kind of like how our governments are sugarcoating it. He goes on to say, and use this ignorant method to cover their unprecedented budget deficits. I have already cited this figure over the past 2 years. The money supply in the United States has grown by more than 38%. That's $5.9 trillion. The EU's money supply has also increased dramatically over this period. It grew by 20%, about 20%, or 2.5 trillion euros. Today's rising prices, accelerating inflation, shortages of food and fuel, and problems in the energy sector are the results of a system-wide errors in the economic policies of the current US administration and European bureaucracy. So they printed money in huge quantities, and then what? Where did all that money go? It obviously went towards purchasing goods and services outside the West. This is where the newly printed money flowed. They literally began to vacuum up and sweep out global markets. The interests of other states, including the poorest ones, were disregarded. They were left with scraps at exorbitant prices. Excuse me, I have a bit of a cold, guys. While today, at the end of 2019, the U.S. imported about $250 billion in goods. $250 billion of goods per month. This figure has grown to $350 billion. It is noteworthy that the growth was 40%, exactly in proportion to the unsecured money supply printed in recent years. They handed out printed money and used it to sweep up goods from the markets of third countries. So Putin really just kind of, he's got his finger on the pulse of this. There's only 10 seconds left here. Obviously, such a sharp increase in demand without adequate supply has triggered a wave of shortages and global inflation. So this is where all the inflation is coming from, and he outlines it quite well here. This is where the global inflation originates, and that is the end of the clip there. Now that's Putin going off on the West. Obviously, Vladimir Putin, a very smart man, and detested by most Western leaders, detested by the World Economic Forum. Is he throwing a wrench in their plans? Crypto Eddie also brought up this interesting clip. Now this is Anja Manuel from just last month, so about a month after the Putin speech, and she is a Ripple board member. Now remember, it's all about perspective. Listen to what she says here. Maybe it's not as bad in the US as we're supposed to believe.
Let me read you just a couple of headlines. in 3 buckets. First, our rivals are superior in effective military power. America's enemies claim victory in technology race. Second bucket, no easy cure for the American economy in sight. Stock prices plunge. President sets price ceilings. And the third bucket, this decade will see a disintegrating international order, and the era of U.S. dominance is finished. Sounds a lot like the doom and gloom of the last few months, right? You'd think so, but no. The first set of these headlines, real newspaper headlines, is actually from the 1950s and 60s when we were worried about the Soviet missile gap and about Sputnik. Did the U.S. complain or give up? No. We worked on a bipartisan basis to revamp our science and technology education system, to kindle Silicon Valley and other innovation hubs, and we became the most innovative economy in the world. The second set of headlines are from the economic worries of the 1960s and the stagflation of the 1970s. What did? We took some painful economic medicine, we raised interest rates, we got it under control, and eventually we created the longest economic boom in our history. And the third set of headlines, the defeatist talk about the disintegrating international order and U.S. dominance being finished, those are actually from the early 1980s, believe it or not. Did we turn tail and go home? No. We finished the Cold War peacefully with some ingenious diplomacy. We reunited Europe, and we weathered many crises successfully in the last 3 decades.
So it is all about perspective, isn't it? As per Crypto Eddie here, wanted to thank her for pointing that out. Now, I guess the next step for the United States is, what is the next move? How are we going to avoid a full-blown crisis, or is this already baked in? As we know, the World Economic Forum, the powers that be, the central bankers, they know that they've effed up over the last, let's say 100 years. And so this monetary system is not working, and we're seeing what we're perceiving, or what we believe we're seeing, is a controlled demolition of the current monetary system right now. So these headlines from previous decades, they were constructed to drum up feelings within the population that were reading them. And, we're seeing the same kinds of sentiments today. It doesn't really speak to what is really happening and what is really going on. I think Vladimir Putin really does nail it here. So, if this is the reality of the economy in the West, what's the next move? And are we just being fed headlines to get us worried? All things that make you go, for sure. Now, the Wrath of Kahneman also bringing this up, okay? This is a 2002 economic report and physical update from the Republic of Palau. Now, we know Palau is working with Ripple on their CBDC. It does note stablecoin implementation with Ripple, and it's not just for commerce, but for international finance purposes. Just down here in this report, it says, rather, the option of combining a planned approach to achievement of the high-value tourism concept together with the prudent pursuit of new opportunities that Palau's inherent sovereignty and enhanced communications capacity now provide. The administration has focused on the international finance sector with new initiatives like the digital residency and possible issue of a US dollar-based and dollar-backed stablecoin, together with legislation laying the groundwork for private banking and trusts. Now, he does also link the full article here if you guys are interested. Just kind of more to do with Palau and that particular proof of work concept. It almost feels like a proof of work concept, but it is their stablecoin that is being built on the XRP ledger. I think once other countries realize that Ripple can perform and succeed at this at kind of the smaller scale, they're probably going to be more willing to approach Ripple for, perhaps to help to construct their central bank digital currency. We already know Ripple has partnered with other bigger countries already, but nothing has really materialized as of late. We are still in the early stages. Anyway, just thought this was interesting because it is the central bank digital currency, the CBDC, coming out of Palau that Ripple is involved with. Anyway, wanted to thank the Wrath of Kahneman just for posting that. XRP IBX here on Twitter. Now, you'll notice that hand positioning. This is Charles Gasparino here with Brad Garlinghouse at the Milken Institute. Upside down triangle. Does this have to do with, I don't know, perhaps a secret society? Or is it the opposite of this? I'm very careful not to say these words on YouTube. It's funny because Real XRP Boy also posted this from a couple of days ago. Yeah, that's Navin Gupta here. And take a look at his hand positioning. Nikita Sajdev had the honor of interviewing Managing Director of the MENA and SEA region, Navin Gupta, for Ripple. Stay tuned for the full episode. This was from CNBC Arabia. Listen to what Navin Gupta had to say about investing in cryptocurrencies.
Hey guys, it's Nikita Sajdev, your host for CNBC Arabia's On the Chain. I'm here with a very special guest, Mr. Navin Gupta, the Managing Director of Ripple for the Middle East, North Africa, and Southeast Asia. Thank you so much for talking with me today.
Thank you very much. Great to be here, Nikita.
So I will share the exclusive interview with you guys soon, but meanwhile, Mr. Gupta, what advice do you have for people to endure the bear market?
So very simply, two things. So one, be in it for the long term. And then second, invest in projects, protocol that are building for real use case, real utility, and they're building long term. So then you'll be all right.
Hodl and biddle.
Hodl and biddle. Even Navin Gupta is saying it. You know, if you're going to invest in cryptocurrencies, he should be a YouTuber. He should have his own channel. Invest in projects that solve problems. Obviously, he's not going out and saying invest in XRP, but we know what projects solve the problems. We know what projects the World Economic Forum is behind, and we know which coins are crap coins and coins that are going to actually have value in the future. And Navin Gupta here, Managing Director of Ripple in the MENA region and the SEA region, just reiterating this point here on CNBC. So I thought that was great. Wanted to thank Real XRP Boy for pointing that out. Now, I also saw this guy's from JV here on Twitter, a great interview here with Mark Yukso of Morgan Creek Digital, okay? And he gives his opinion on Ripple's XRP and Stellar's XLM and why his hedge fund did not invest in those two particular cryptocurrencies. Now, he says that, you know, there's a lot to talk about here and he doesn't really get into the whole thing. But he does bring up some points, and there are a few clips here. I'm not going to play them all. I'm going to just kind of summarize what he said, but I will link this in the description so you guys can have the clips if you want to watch them yourself. So basically, when asked about this, Mark Yukso of Morgan Creek Digital, we get the idea that he regretted his decision not to include XRP and XLM in Morgan Creek Digital's cryptocurrency indexes. But there were reasons from that, okay? He mentions that the old financial world was trying to kind of almost shoehorn in cryptocurrency in the same kind of way that traditional assets were indexed. So, you know, they're basically putting crypto into indexes the same way that you would put stocks into indexes in for various different sectors. And it didn't quite work because of just because fundamentally cryptocurrencies are not the same as stocks or companies. So he said that was kind of the first problem, and this goes back to the beginning of when they started to do this. And he also mentions this point that indexes are inherently flawed anyway. If you guys want to get more detail on that, watch the clips. But I want to get to this. So part of why he couldn't add XRP or XLM was because in order to, and this is a traditional stock rule, okay? In order to add something, you couldn't have something be over 50% centralized. And he explains what he means by that. Not that the XRPL is centralized by any means, but because of the escrow, like literally because Ripple held the escrow, they legally could not hold a cryptocurrency. And it was the same with XLM. They legally couldn't hold a cryptocurrency where one entity holds too much of it. And then he gives another example of Elon Musk holding a lot of Tesla and why Tesla stock wasn't able to go public for a long time. So there's an actual legal reason why he wasn't able to, but I do get the sense that he regrets it. Now, I am going to play you guys a little bit of this clip. Listen to this.
But, you know, we went along with it and we did it. And one of the criteria of the S&P 500 is you have to be a certain size and you have to be enough free float. You can't be centralized or it can't be centrally controlled. And so that's why Tesla wasn't in the S&P for a long time because it was owned too much by Elon, even though it hit all the other criteria. So we own the top 10 crypto minus anything that has more than 50% held by one entity. So that got Stellar and XRP out. That wasn't me pissing on either one of those. It was just, that was what we used as the rule. And we didn't do it. So I don't own XRP. I have great admiration for the group and the team and what their goal is approaching this massive infrastructure system.
Okay, and I'm going to leave it there. He goes on into why he likes Ripple, the company. you know, what they're doing basically. He does also say that because of the court case, this isn't helping, obviously, as well, as we all know firsthand. XRP has been suppressed because of this court case. But at the end of the day, he says, you know, the court case is ultimately going to be a good thing. And he says this, and I quote, "If you come at the king, you better not miss." And again, I will link these 4 clips. There's 4 clips here. I will link them all in the description of the video. They're all from JV's tweet thread. If you come at the king, you better not miss. That to me harkens back to these bearable guy riddles where obviously the king is sitting in the castle, and throughout the years, Bearable Guy kept releasing these riddles, and as you guys I'm sure have noticed, the king getting progressively more upset, until finally, the dejected king in the most recent Bearable Guy riddle from last Christmas is watching Brad Garlinghouse taking his ship to the moon, ensuring XRP adoption eventually will take hold. So Mark Yukso sounds like he regrets not adding XRP and XLM to his index fund, but that's not to say that he might not add it in the future. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.